Hello, everybody, and thanks for coming back to the Crypto Club. This is episode number 5. As always, I'm Gons, and we are here with Hobo. Say
Yes,
hello,
sir.
Hobo.
Hello.
All right. So let's go ahead and get started. We got a few stories today.
Totally. So starting off with this first story here, talking about CZ saying that he's poor again after the Luna crash. So the headline is reading. Oh no, thank you. Headline is reading: Crypto exchange Binance founder says he's poor again after Luna crash. So Changpeng Zhao, the founder of cryptocurrency exchange Binance, also known as CZ, tweeted a few days ago that he was poor again after losing billions of dollars of cryptocurrency following a market crash, which wiped out the fortunes of many investors. The exchange's assets in the cryptocurrency Luna fell to just $2,200 from $1.6 billion at the token's peak price a month before. In a tweet, Zhao claimed that Binance held 15 million Luna tokens, which the exchange had obtained in exchange for 3 million investment in the Terra network, which Luna is founded on. The Luna tokens were never moved or sold, he added. So, down bad, RIP CZ. I mean, obviously he is fine, and this is kind of satirical, but, that's crazy going from $1.6 billion to $2,200, although, the initial investment was only 3 million, and that turned into 1.6 billion. So quite the
That's
roller
crazy
coaster
on both ends. Yeah, that's a huge moon to huge huge liquidation.
Yep.
And I mean, like you said, it's just a funny article to lift the mood. He's doing very fine for himself. He's
Right.
definitely poor.
Yeah. Yeah, but here is a picture of the tweet right here. Retweet or quote tweeting an article saying poor again. Classic CZ. So the article goes on to say Luna's fall began when Terra USD, its sister coin, lost its peg to the US dollar. The two tokens' prices are linked. When the price of Terra USD dropped, investors raced to sell their holdings. The price of Luna was pulled down by the drop in Terra USD, and we talked about this last week. But these algorithmic stablecoins, that when it starts to depeg, they meant Luna to back the peg, and it's just a chain reaction of minting more and more, which dumped the price, and it just went to zero.
Good old Luna.
Right, absolutely lovely. This is why you've got to love crypto, right? You can either make it all or lose it all. So,
and in this case, Binance did both.
right. That they did.
All
I
right.
think most of us have been in those shoes before. Surely not to this extreme, but let's get on to the next article here. FTX launches U.S. equities trading with stablecoins as funding option. This is something I think is super interesting, because we haven't really seen a bridge between crypto and U.S. equities like stocks, things of that sort. And trading them against stablecoins makes a lot of sense, as long as it's a stablecoin that's truly stable. Not something like trading stocks with UST, because obviously, we can see how that went. But getting on
You
with
crashed the stock market.
yeah. So getting on with the article here, it says Sam Bankman-Fried, the meme-loving billionaire founder of crypto exchange FTX, is back in the news. A week after Bankman-Fried purchased a 7.6% stake in Robinhood, FTX has launched its stock trading platform, FTX Stocks, in beta. FTX Stocks offers trading and investing in a range of U.S. securities, including common stocks and ETFs. The platform offers no fee brokerage accounts, commissionless trading, free market data, and no minimum required balances or tiered systems. The move comes days after Robinhood announced its own foray into Web3 with a DeFi wallet. Say it's about time, Robinhood. So FTX now operates the first stock trading platform that allows users to fund their accounts with fiat-backed stablecoins like USDC, customers can, of course, still use bank transfers and other traditional funding methods. So, I wonder if this is more like you fund your account with stablecoins, and then you sell the stablecoins in FTX, and then from there you could trade stocks, or if you're trading stocks directly against stablecoins.
Yeah, it definitely seems like it's at least the first one. And what it's basically doing is just bridging crypto funds over to the stock market.
Right.
Which I don't know. How do you feel about that? Like,
I mean, I don't know. I think it's just taking steps out of a process that people already do. Otherwise you're just gonna, cash out your crypto and then fund a exchange. I mean, surely that takes, at least a couple of days for those funds to settle when you're moving it like that. So, I mean, really, this just makes it easier, but it's nothing like revolutionary.
no, yeah. So I think that it's what I am willing to bet is that a lot of these exchanges are losing volume,
Right.
which is how they make their money, from trading fees and stuff like that. So what the natural progression is, well, hey, let's transition some of that volume, or at least some of the funds, crypto, over to the stock market so that we can continue to make money, trading fees and stuff like that. Because the stock market obviously is a much more developed market.
Right.
There's a lot more trading volume. So right now in the bear market, there's a lot less volume in crypto. It makes sense for them as a business to go ahead and allow users to bridge funds over and start trading on the stock market so they can stay alive and still be profitable.
Yeah, I think that's a great point. Trying to keep the volume there. Surely it is decreasing since we've been in this downturn. Although we do have, events such as the crash where volume is just massive. But I mean, really just adding more markets to an exchange like FTX is doing with their stocks is only going to bring more volume. And most likely in the long run bring them more profit, but also sustainably, not just throughout the bull market.
Yeah. And the only thing is it is kind of a double-edged sword, because when you're essentially taking some volume out of crypto to keep FTX alive, I would argue that it definitely wouldn't be bullish to see a company like EX start basically doing what Coinbase did, which lose like a lot of valuation in their stock price, and start losing profit, stuff like that.
Yeah.
Because at that point, it's a bad crypto. So it's one of those things like, not happy about them taking volume away from crypto to, put it into the stock market, and so they can be profitable. But at the same, it's like kind of want them to remain profitable so that it doesn't just look like, all the giant crypto exchanges crashing. Because at that point, that's bad, sure.
Right. Also, though, I mean, sure, it's making it easier, but like I said, like this is something that people can already do, and I'm sure tons of people do. Pulling money out of crypto, putting it in the stock market, it just takes a lot of extra steps. So I don't know. Personally, I don't think I would say they're taking volume away from crypto. Because if these people want to take money out, put it in the stock market, I think they would do it either way.
They would either way. My point is they're making it incredibly easier for like even people, right, who are on the fence, because what you have to understand is it goes a little bit deeper, in my opinion. So there's a lot of people that are crypto investors that are on the sidelines right now waiting for volume to return.
Right.
At the same time, for whatever reasons, they may not want to cash out crypto, get taxed on it, versus, and then put it into, a bank account and then fund their stock market out that way, right? It is tedious, and there's fees involved, but there's also KYC involved, taxes and stuff like that. So with this step, it's a million times simpler, to the point where they probably will get a lot of people, especially people who use FTX, seeing this announcement and going, whoa, wait, now I can finally trade crypto or trade stocks, and all I have to do is deposit USDC. Like, I
Well,
mean, even myself as a trader, like I don't think I've ever really been that interested in stocks, but when I read this announcement, I was like, huh, maybe I'll deposit a few, couple
yeah, I
thousand
mean,
bucks.
FTX is, it's a KYC exchange. You're not able to use it unless you KYC, and obviously you got to pay your taxes on it. I think FTX is one of the ones that issues 1099 or whatever.
Yeah, but again, my point is they're making it easy, and they're making it accessible to the crypto people that may not want to cash out in the first place. So if you don't have to cash out to your bank account and you can transfer into FTX, like that's so much easier.
Sure. Yeah, fair enough. I think it'll be interesting to see how this goes for FTX. I'm sure in the long run it'll be good. I also wonder if the beta is an open beta or a closed beta, because I just personally haven't heard any anecdotal stories of people actually using this.
Yeah, it's probably closed because I haven't heard anything either.
Yeah,
But yeah, I hope it goes well for them. I mean, it's certainly a smart idea on their part, and hopefully it helps them remain profitable and continue to grow.
totally. All right, well, we will get on to the next story here. So, the European Central Bank president says cryptocurrency is worthless. So, Christine Lagarde, president of the European Central Bank, has warned that cryptocurrencies are worthless and should be regulated. The ECB boss believes that regulating the sector will prevent people from gambling their life savings on cryptocurrencies. My extremely modest opinion is that cryptocurrency is worthless. It is founded on nothing, and there are no underlying assets to serve as a safety anchor, she said. Lagarde continued, I have always stated that these types of assets are highly speculative and extremely risky. Sure, it is risky, and there is a lot of phenomenons and things in crypto that are truly worthless and will likely go to zero. Just things that are vaporware. Dogecoin, like things like that have zero utility. Obviously Dogecoin's pretty massive, but it's all just a community, and that's where the value really is. And that's all speculation, trying to place a price on a community, as happens with tons of these coins. Cardano got absolutely massive this year with just zero working product. It's down about 6x from all-time high.
Yeah, I mean, I just looked it up. She was born in 1956, so
Right.
I'm not
Right.
I'm not really surprised by her take. I'm also not really interested in her take, and it's kind of funny. Like cryptocurrency in reality is just digital currency and the same basis compared to, I would say, 99 all currencies in the world. Um, because they truly are not backed by anything. I mean, the U.S. is backed by the full faith
Yeah.
in the government, right? And there's very few countries that actually have reserves and stuff to back their currencies. So like this whole article is baseless. Who knows? She might even be buying crypto and just trying
Right.
to get you to sell.
Right. I wouldn't be surprised, but
No, that's usually the tactic behind these kind of headlines. And when it comes from people like in a higher power like this,
yeah.
typically you should do the opposite of what they tell you.
No, and I totally agree, but I think it is worth noting there are a lot of worthless cryptocurrencies that have gotten absolutely massive, but at the same time there's a ton of, super useful ones like Ethereum, where it's like it's more so of a software than it is a currency. I think putting all of those in the same bucket is just unfair.
No, yeah, for sure. I mean, but again, it goes to show you how little educated she is on the subject.
Right.
Which again, I mean, she's 66. I don't expect her to understand blockchain technology, but um, no, I mean, everything in life has value, and it's up to you as a consumer to determine what that value is.
Mm-hmm.
So obviously, there are shit coins, there are rugs, there are that are pump and dumps. It's up to you as a consumer and an investor to determine that, and be smart with your money and your investments.
Right.
But yeah, I agree with you. There are tons of utility coins and projects, coins that are backed by true software and innovation that are absolutely not worthless. So,
Right. Right. So, yeah, getting on with the article here. It says, mounting pressure and scrutiny, Lagarde made the remarks in the midst of challenging times for Bitcoin markets when major coins such as Bitcoin and Ether have lost half their value from their 2017 peaks. Let's see, so this... When was this article published? Oh my goodness.
27.
Yeah. One day ago. Maybe this is an old speech. Anywho. So
Wow.
Lagarde made the remarks in the midst of challenging times for Bitcoin markets when major coins such as Bitcoin and Ether have lost half of their value from their 2017 peaks. Cryptocurrencies are also receiving increasing scrutiny and pressure from global regulators who frequently cite dangers to the financial system. Other ECB officials have expressed doubts, among them is Fabio Panetta, a member of the ECB's executive board. In April, he stated that crypto assets are creating a new Wild West and compared them to the subprime mortgage catastrophe of 2008. Lagarde pointed out that she has never invested in a digital currency, a statement that is not surprising given that other specialists in banking and finance hold the same opinion. However, the financial guru said that her son had invested in cryptocurrencies and failed miserably. While condemning Bitcoin and other related currencies, Lagarde said that she will support the establishment of a digital euro, the bloc's central bank digital currency, also known as a CBDC, and it will be supported by the ECB. So she says, the day when we have the central bank digital currency, any digital euro, I'll guarantee it. So the central bank will be behind it, and I think that's vastly different from any of those things. Recently, Panetta stated that the digital euro might be implemented by 2026, establishing a timeline for its introduction. The project is now in the review phase, and since the ECB is intensifying its engagement with stakeholders, the implementation phase may not commence until the end of 2023.
So crypto is worthless, but get ready to invest in our crypto coin that we're going to release soon.
Right.
Oh, man.
So it goes. Yeah, that's interesting right here. It talks about the 2017 peaks when they're clearly using data from this year.
Yeah, again, it just goes to show you that not everything you read should take literally or factual.
Sure.
Yeah, she's a mess. This article's a her son's a mess.
Yeah, good old central bank.
He got wrecked.
Yeah. Yep. Well, let's go on to the next article here. So, it's not just Luna. Terra's DeFi apps have hemorrhaged $28 billion. So, I mean, we're all familiar with the Luna crash, but an aspect of that is quite large that really goes untalked about for the most part so far is all of the apps built on the ecosystem. You had all these teams working on products in the Terra ecosystem, and the crash of Luna just, not only destroyed the product, but destroyed the funding, because I'm sure lots of those products had their funding in Terra, and obviously Terra is not worth nearly what it was. So the article here says investors have largely exited the Terra ecosystem, now evident in DeFi protocols on the blockchain, and analysts remain skeptical about its long-term prospects. In the 2 weeks since Terra's US dollar peg stablecoin, Terra UST, lost its peg, causing massive investor losses, billions of dollars have been taken out of the ecosystem. Data from trackers show funds held in decentralized finance applications built on Terra have slumped to 155 million locked value as of Friday morning, a level last seen in February of 2021 from more than 29 billion at the start of this month. Locked value on Terra DeFi peaked at 30 billion in early April. The declines came as UST lost its 1-to-1 peg against the US dollar amid a broader slump in markets that created a death spiral as investors exchanged UST for other stablecoins, sending the Terra token to as low as 4 cents on May 14th. Experiencing significant losses or seeing others take significant losses at no fault of their own is probably one of the fastest ways for protocol or blockchain in this space to lose the trust of the community, Simon Furlong, co-founder of Geode Finance, told CoinDesk in an email. Very true. You know, I mean, if everyone's getting wrecked, people are going to want to stay out.
So, to what level, I mean, how do you feel about Do Kwon as far as, I mean, what level of responsibility does he have? And also, I mean, you're essentially talking about a loss, like billions and billions, more than $28 billion. So, what level of responsibility does he hold? And what, if any, repercussions do you think he should face because of this?
Yeah, I mean, I think he holds, tons, if not all, of responsibility. I mean, there's countless videos of him that are old that people have been bringing up of him just, being arrogant. Like literally talking about the fact that Luna will go to zero. He also, there's a failure to act for, quite a while. Really things didn't happen as swiftly as they could have. I just think it was too little, too late, and I mean, if you run a massive project, I believe Luna was a top 20 coin, you've got a responsibility to a lot of people, and I think that was something Do Kwon didn't really realize how deep he was, I suppose. And I wouldn't be surprised if he got some prison time or anything like that, but
do you think he should get some prison time?
I would have to look deeper into it. I guess at a first glance I do, just because all of these old videos of him just being arrogant and talking about the potential collapse of Luna when none of that was made evident to investors. Also just his attitude on Twitter, like people criticizing him, like literally warning him of this to come, and all he would do is just call them poor, and people were trying to shove it down his throat of what might happen, and he just could not care less.
Yeah. So I'm of the same stance. I think that he is definitely responsible in large part, and I think you're right. He probably did know about it, which is why he really didn't pay much mind to the people warning him, because something he already, and he was probably just too arrogant to see it coming so quickly. Additionally, yeah, I mean, as far as laws go and repercussions and stuff like that, it is something that I mean, I don't know what the laws are over there. He's in Taiwan, right?
Either that or like Korea, I think, South Korea.
Yeah, one of the two. Um, I think that some degree there's going to be some kind of repercussion for him because you don't just make investors lose $28 billion and get
Right.
away scot free. I don't
Yeah.
think it works that way, regardless of what country he lives in. So curious to see how that plays out. But yeah, I think the losses are probably more than this. This is still hasn't even accounted for everything.
Mm-hmm. Yep. I think this will be quite the case for prosecution and regulation to come as well. I mean, there's a lot of case by case law, at least here in the U.S., and I'm sure it's the same worldwide. So I'm sure this case in particular will kind of pave how things are done in a regulatory way.
Yeah, it's interesting too. Like if obviously he is going to get some kind of punishment, but like you said, this will pave the way in the future. So I wonder if, and again, I think this is a good thing. Um, if this sets like a precedent for developers to really understand the responsibility that they take on when they develop stuff like this.
Mm-hmm.
Because in the future, this may be something that's used to or cited in the future, um, part of like a new regulation guideline for developers. So it could be huge. I
Yeah.
also think that if there was like a trial, it would probably be 10 times more popular than the Johnny Depp trial right now
Right. Right. No, I
for
agree.
Do Kwon. Oh man, that would be so funny.
Yeah. Yeah. So just continuing with the story here. Analysts point out issues. While Terra developers have put a revival plan in place to recover the ecosystem and ensure long-term growth, some analysts say a lack of trust remains. Traders and investors suffered tremendous losses and doubt management's actions that followed the UST unpegging, said Anton Golan, regional director at crypto exchange AAX, in a Telegram chat. Anything incoming from Luna's team may be treated in the same way as the lack of trust prevails. Terra developers are proposing a hard fork of the network, which would create a separate new blockchain as part of the revival. The community is apparently not on board, however. Results of an online preliminary poll this week saw 92% of responders vote no on the proposed change. Trust has been lost, but in the event of compensation for losses and a return of funds, there are chances for its restoration. KuCoin CEO Johnny Liu told CoinDesk in an email, "If the ecosystem and the team can handle the recovery process wisely, this will be a positive signal not only for project investors but also for new users in the entire market." I mean, I think that is true, but I don't know. I think that might be a bit too optimistic, just
For sure.
considering the damage that's already done.
Yeah, unless he's gonna make $28 billion magically reappear,
Right.
the damage is already done. Um, Man, I tell you, KuCoin's got that good hopium.
They do. Yeah, they do. So,
Yeah, let's move on from Luna, Terra, Do Kwon.
right. So,
At this point, everything that has needed to be said has been said.
yeah, no, I would agree. Let's get on with the story from Cointelegraph here. How NFTs are making real estate investments more attainable. Although real estate is often considered a safer investment over stocks, it isn't for everyone. Although real estate is often considered a safer investment over stocks, it isn't for everyone. A reality leading many to look to the digital realm as an alternative. Analysts continue to view real estate as a secure and lucrative investment based on its history of high returns, especially when compared to traditional stocks. In many ways, stability can be likened to the scarcity principle driving demand. But ultimately, there are only so many plots of land available in the world today, unless explorers move beyond Earth's borders. One more benefit of real estate is passive income, since many real estate investors make money through rent payments that provide a steady income stream on top of the property's value increase. Of course, leveraging a real estate asset makes the asset more attainable, enabling users to expand their holdings even without having enough cash on hand. Yet, real estate is not the perfect investment for every investor, despite these numerous benefits. Unlike other assets, which can be purchased incrementally, real estate requires the owner to save a substantial amount of money before placing a down payment. Concerns around down payments are second to the level of risk in holding a property investment, as it cannot be liquidated easily to address an immediate need for cash. Therefore, despite the advantages of investing in this asset class, the barriers are still relatively high compared to other traditional avenues. So, addressing this accessibility gap, land in the metaverse, also known as NFT land, is a rapidly growing sector in which many players are capitalizing on similar opportunities to create, earn passively, and grow their wealth without the drawbacks or restrictions imposed in the real world. Some of these examples include the seemingly unlimited opportunities to test an investor's creativity through bespoke creation of a storefront, home, business, or entire community tailored to their liking. Of course, all this can be done with the security that comes with blockchain backing, which verifies the authenticity and ownership of each original plot. So yeah, this is pretty much talking about the whole, metaverse and digital land craze that we've seen recently. I know that Shiba has released some digital land plots. I mean, they're quote metaverse, but really, I don't know. As I see it, all of this digital land craze is really just, vaporware, and we are too early for it to really be fundamentally valuable. Sure, there are some things that have given a crazy ROI as far as digital land, but I don't think the current projects are here to stay.
No, it's all speculative, and it's a contrast to real life real estate, because obviously you cannot mint a new world in the real world,
Right.
then sell new plots of land. It's finite and there's only so much. Whereas in the blockchain and the metaverse, sure, they can say that the world is only so big, but that is one project. You have hundreds of projects creating hundreds of metaverses, and so it becomes kind of a situation of, well, which one do you invest in? And like you said, I don't think any of them have reached like a real utility use case. I think it would take like some giant corporation or company to get us to that point, like perhaps Meta. But even then, it's a matter of, well, are they gonna survive? Because once that project fades away, or there's no longer any interest or hype behind it, like you said, I didn't even know Shiba was doing metaverse land.
Yeah.
That's actually crazy. I don't even know what they would do with that. But yeah, you're gonna start seeing more and more of these projects, creating this stuff, and at the end of the day, it's not as valuable as you would think, because there's so many different virtual worlds that can be created.
Yeah, it just doesn't have that same scarcity aspect that real estate does.
Absolutely. It's almost like if we found like a second Earth, and it was an exact copy of ours, I bet you home prices on this planet would plummet, because everybody would be trying to buy land and move to the newest world
Right.
2.0.
Right, but then we'd find 3.0, 4.0, 5.0, 6.0,
Exactly. And so what happens to the original planet, right? Our planet. Man, you'd see houses like $1 million homes for $50K.
Yeah. Maybe
So
that's how we
same
fix
exact
the real
concept.
estate bubble.
Yep.
Start finding new worlds. Migrating. So, taking a closer look at virtual land, to give this concept a definition, consider that digital reality exists in a virtual space, one that tech investors, crypto enthusiasts, and the general population define as the metaverse. On most platforms, users will find a realistic experience relying on a three-dimensional setting and therefore providing users with an immersive element that mirrors the real world in many ways. These projects are often divided into smaller areas and sold as land or plot offerings like the physical world. Each plot is often purchased with the asset's native cryptocurrency, although some projects may accept fiat. To some, however, the question remains largely unanswered. Why purchase something in the digital world rather than the physical one? As movies like Ready Player One proves, the virtual world is just a place where people can fulfill their social needs, which is why more and more people are joining these platforms. Taking a different perspective, many look to residents of impoverished countries who may never be able to enjoy the same real-world lifestyles as millionaires. For some, virtual reality has been seen as the bridge to overcome these inequalities, the great equalizer, if you will. That kind of makes me cringe, to be honest. Like, saying that, let's see, where did it say? Like saying that people in impoverished, countries may be able to enjoy the same lifestyle as a millionaire, but in VR, and using that as a way to appeal to this, like, NFT land, I just think that's a bit ridiculous.
Oh, immensely. I mean, it's not even close.
No.
But yeah, eventually we may get to a point where we can take that technology further. Ready Player One was amazing.
Yeah.
So I mean, something like that to that level, I could maybe get behind and understand.
Mm-hmm.
But even then, it still doesn't become valuable because, I mean, sure, you have like an amazing game that manages to create something to that level, but then, as we all know, competition, capitalism drives competition,
Right.
and we'll have a new game that comes out that'll be better, or it'll be Ready Player Two, and
Yeah.
then all of a sudden, everything you bought in Ready Player One is no longer as valuable, so you lose money on it. So, I think the concept, again, same thing with NFTs. I've said it before. NFTs is amazing technology, and there's a lot of potential, but we have not even close to what it can do or what value it can bring to the world yet.
Right. Yeah, I mean, I think that one way some of these metaverse projects will actually take off is the possibility to earn within the metaverse, right? Like in Ready Player One, people have jobs inside the VR game that they like make a real life living through, and I think that is surely a possibility. But until we see that, I don't see them picking up all that much steam.
Yeah, for sure.
But it's surely a strange time when you really think about it. People are spending 6-7 figures for digital land plots. Slightly questionable, but you know what? We're just here to read you the news. So let's go on to the last story here. Bitcoin and Ethereum hash rates hit all-time highs despite the bear market. So cryptocurrency miners continue to pump computing power into the Ethereum and Bitcoin networks despite their tokens' recent price drop. The hash rate for Ethereum hit an all-time high on May 13th when it topped out at more than 1,126 terahashes per second, according to whitecharts.com. Bitcoin's hash rate peaked 2 days later at over 254 million terahashes per second per blockchain.com. So, as of Thursday morning, Ether and Bitcoin have both fallen almost 60% from their all-time highs of $4,878 and $69,044 respectively. Nevertheless, the miners that validate transactions on the Ethereum and Bitcoin networks continue to find profit in the work, said Will Foxley, content director at Compass Mining. Hash rate is just going after potential revenue from mining. As long as there's a gap between the cost of mining and potential revenue and profit, he said, you're going to see hash rate continue to climb. The hash rate is computational power used to validate blockchains. The higher the hash rate, the more secure the network, since more validators are securing the network. This makes a so-called 51% attack much harder to execute, as a malicious actor would need to control a majority of the hashing power. As data from the past week shows, the blockchain's hash rate is divorced from the market until a point. That point is where the cost to mine Bitcoin or the cost to mine Ethereum is near equivalent to the spot price. Foxy said, for Bitcoin, you can still mine a Bitcoin for a few $1,000s cheaper than it costs to purchase it at spot, depending on your machine. The same goes for Ethereum. In fact, mining Ethereum has been more profitable than Bitcoin for much of the past year due to the former's meteoric bull run. While the token is down substantially from its all-time high, it's up more than 1,400% since the beginning of 2020. So, it's pretty cool to see this. It's just, to me, it shows that, fundamentally there's much more to crypto than, just the spastic price action, right? Because, we're in quite the slump right now, not only in crypto, but in broader markets, and we're seeing, some of the strongest networks we've ever seen.
I think it's pretty cool to see that mining is still profitable. I mean, mining is essentially the backbone of blockchain,
Right.
At the moment anyway, until proof of stake. But it may be, I don't know, obviously do your own research, but aside from like DeFi tokens, right? Like, low market cap coins that are utility projects or like real communities.
Mm-hmm.
Maybe the other smart play in this bear market is to, start looking into mining as well while we trade sideways for a bit.
Yeah, it could be. I know that, that in particular requires a huge investment to, start making anything, and who knows if it'll remain profitable long enough to even break even on, what you've spent. But, these are all
Speculative, yeah.
Yeah.
From what I've read, it's usually like 6 months to a year, depending. So,
Yeah, not bad.
no.
I wonder when the next halving is as well.
Yeah, that too.
But yeah, quite a cool story. It's good to see the network only growing, even as we're in these slumps. I think that's a good sign for the health of crypto overall, despite a lot of the craziness that's happened in these recent weeks, to say the least.
Yeah, for sure.
But yeah, that wraps up our final story for episode 5 of Crypto Club. Kind of a dry week. I think after last week, we'd have to have some
Settle down.
Yeah, we'd have to really have something groundbreaking to beat last week's events. But so this has been the CoinScan team coming at you with another episode of Crypto Club. We love doing this every week for you. You can always count on us to bring you some unbiased DeFi news. Share our true thoughts. And yeah.
Make sure you like and subscribe. That way you guys catch the next one next week. And make sure to join the CoinScan Telegram and Discord if you have any suggestions or articles you want us to cover or any topics. We'll be happy to look over them and include them in next week's podcast.
Yep, that is true. And we're hoping to start bringing on some guests pretty soon here. So, the Crypto Club's only going to be getting better. And we are excited to see where this journey takes us. And we thank you all for embarking on it alongside. So have a lovely Monday, and we'll see you next week.